Hey everybody, welcome back to the pre-market outlook discussion. After the holiday, this is 4th of March 2026. There is no need to give a introduction-based trend on the Indian markets because it is everybody knowing that the geopolitical tensions escalated from the West Asia side because of the US Israel's attack on Iran and retaliation is being taken by the Iran itself. So togetherly, what the current circumstances around West Asia and Israel, US are not making peace and giving a jolt on the markets across the globe, which is now can be seen in the red for all over the markets. That is what the reason for our markets also to feel the heat and going to be experienced about the gap down open during the day. Since the war kind of actions, those started as commented by the US president side and the Israel side, the probability for not prolonged continuation on this kind of war actions may not be there if Iran folds with the actions and policies taken by the US and Israel side. If it happens so, we can see the actions what coming and what it is giving an impact will not be long lasting. That would be a good news for the overall global economies. But if not forced by Iran side, if they want to continue as a activity of making war, so then only the concern will be increasing and the tensions will be escalating. But for this, what kind of results we can expect from the two region side, we have to wait and watch. Until then, a high volatile trades which may not be suitable for the day traders if you are only a long based one. The long traders cannot be affordable while approaching the markets, stocks, sectors, wherever it is. Particularly for those who wanted to make in the cash segment oriented trades. If you are an option trader, it would be better to concentrate on put option buying side or call option short side or writing side to make utilizing the opportunity and volatility. Other than this, even though you are approaching many strategies, adapting them, following with the technical levels and all may not be enough to make you feel comfortable while taking the trading decisions. Why we are telling this means the volatility what really going on will easily hunt the stop loss or hit the stop loss if you are particularly on the long side. So it would be based on the holdings if you are having, you can utilize any bounces if it is giving to reduce your holdings or trim your holdings and not for building the long. On the other hand, if you want to buy and sell kind of activities, say if you desire, then you can concentrate on buying the put option or selling the call options. This is the only safer when compared to other strategies are available to trade on the markets now. And even though this is being termed as safe, the high safety or low risk appetite traders will not be, that means are not being guided or suggested to enter into the market because this is the market only for the high risk appetite traders. What about for the investors means this is the good time to make the lump sum of investment from the long term perspective particularly from the large cap space and the selected mid cap stocks. Those who missed the recent year rally in the February 2025 about the market hitting the low of 21,800 below, this is the time to experience that kind of activities probably now happening. And we are not telling the reversal happened yet. Yes, the reversal will not happen immediately from the current zone. For that, the 24,700, which was acted as an important behavior shift zone during 2024, the correction while happening, and the recovery also because of the close above 24,700, we have advancedly predicted, and that was too acted. Like in the way now it has started acting, even though it has broken in the earlier February time period, it could not sustain below to that point, so that it recovered 1,000 points to 25,700 or even to 26,000. Then it is again recaptured the 24,700 point through the way of open below to that level on Monday. But it has somehow managed with a fragile manner, closing about 24,700. Then today it is likely to open below the point of 24,700 without compromising that. Based on our concepts, a 2 consecutive actions, if it is on the closing side, the impact will be very higher. If it is on the open side, the next one we are now revealing that the open above or below consecutively with a particular level happens means the direction can be seen on the same direction where it is actually giving the open, and until the open prices and all not closed below in any larger time frame starting 1 hour, there you can get the signal of the low can be again made even though the opening low are there. Say for example, today it is opening below 24,700 on the Nifty side. If the Nifty opens at the level of 24,600, like for an instance we can take. After that 24,600 open, the low may be happening around 24,500 if you take. And it is giving a bounce means you should note that without making a hardly close, at least 1 hour close above the open point of 24,600, if the bounces and are happening, that can be utilized to build the short, reduce the positions on the long side if you are already having. Where you can see the put options also can be bought, and even the call options short side also can be focused. So in case it is getting rejected before the open value of 24,600 as an instance we have taken now, there onwards you can see the attempt to make a new low even though 24,500 already made. That new low may be 24,500 below, and even deeper it can be. So that is what the impact of the consecutive close below the important pivotal or a behavior change zone while the open, close and all acting. So based on that strategy only, we are now telling it is a open value definitely going to be below the 24,700, and based on the strategy discussed now, you can approach the trades. For the day, 24,500 to 24,300 would be acting as a support point. Even if it is not approaching today, it may be the good support point, a valid support point or a support zone. One can keep where the Nifty may witness a very sharp reversal kind of actions, but not a real reversal we can expect. From there, 24,700 till it could actually give a reversal kind of actions or a bounce kind of activities. Again telling, if that reversal kind of bounces and are happening, that should be utilized to reduce your positions on the holding side or long side if you are having. Again, The same strategy of building short positions, buying put options, selling call option also can be initiated around the 24,700 zone, because 24,700 until getting closed again on the daily candle for consecutive 2 sessions, every buying attempt, bouncing attempt will be tested or restricted around the zone. And if it is closing as expected below this point, 24,700, additionally by opening consecutively 2 sessions, after closing below to this 24,700 consecutively for the 2 sessions again, we can see 23,500 reaching signal, probably getting by Nifty side. So that is what our positional based advice for all based on the behavior analysis. For the day, the rate sensitive and price sensitive amongst the sectors, we can get the more impact on oil and gas energy sectors because of the crude oil price bubble and the impact of the geopolitical tensions being witnessed on these sector oriented stocks. Oil refiners will be getting a hit because of the high crude oil prices, and oil offshore companies are producers like Oil India, Reliance Industries, ONGC and all, probably getting a chance to move higher, but because of the market conditions, the move may not be a long lasting one. It may be easily restricted or capped. Then the defense oriented stocks can be focused because of this war kind of actions are going on. It is inevitable for the nation like India, the biggest democratic, even though maintaining this neutral stance and a good relationship between the both region, it is of course required to be concentrate on the defense procurement, defense buying kind of things, so that the defense oriented companies will be in high focus despite the expensiveness the companies or stocks still having. After that, the banking and finance as a heavy weighted one will also be in the line with the Nifty's movement. The pharma and IT can be focused as an opportunity to utilize any bounces if it is trying to do that. The IT stocks, particularly as we have been pitching strongly, insisting the same point, the IT after closing below 30,000 point, there will be a chance for making another round of or leg of downward rally about to 15 to 16% on the downside. So if you are seeing any bounce kind of activities on the IT stock right from the large cap till the small cap, micro cap, you can utilize the bounce to reduce the positions, be lighter on the IT stocks, even though any bounce or buying kind of activities you are seeing. For the pharmaceuticals, it is better to concentrate on building long positions, particularly from the investment perspective, because the pharma sector would be in high focus for the total year, and even particularly on the 2027th year, it would be expected to provide good return who are all investing now. From the stocks front, the day traders can, based on the news and technical behavior, focus on these stocks, including Mahindra & Mahindra, Hindustan Aeronautics, Power Grid Corporation, Lupin, JSW Cement, NATCO Pharma, amongst many are available. So that's it from today's pre-market outlook discussion. Don't forget to keep the stop loss, even though you are a high risk appetite traders. It is common for all to protect the capital and enjoy the best risk and reward ratio. You can see any query there. Regarding the gold and silver, then a query now fallen. See, for the gold and silver, particularly on the gold side, you can concentrate on building long. If you are already holding long positions, it is better to utilize the yesterday's kind of trend to accumulate further, because we are seeing the gold based on the US gold, we are telling new all-time high can be tested by the US gold, and 5,800 would be the next target for the gold. Who are all participating now will be the beneficiary with a huge gain. Don't think this kind of volatility with the yesterday's over 3% are down happening now and all. From the long-term perspective, only you have to approach the gold, not for the trading purpose. If you are a trader, it is better to concentrate on the gold side with a minimal lots if you are a trader on the MCX gold. And silver side, it may not be having an immediate impact because silver's production and the supply side may not be get disrupted. Even the investment, as like in the gold, the silver also will be absorbing. So you can also concentrate on silver side for a long-term perspective, at least for the medium term, not for the trading and the immediate term, because the volatility may burn your fingers and you may not be a tolerate person if you are holding a minimal capital and trading with the minimal amount of capital. So it is better to maintain an investment strategy rather than trading on an immediate basis on gold and silver even. Crude oil means we are expecting crude oil will be escalating further for the next 2-3 sessions at least. And after that, it would be expected to get corrected because of the hasting aggressive buying it has experienced, which may not be lasting for a while. So it may be the temporary one. The spikes and all on the crude oil will be a temporary one. You can utilize if you are holding long positions by booking profits at least as a portion. Otherwise, it is better to keep a wait and watch formula if you are a safe trader. Anyhow, the crude oil is expected to inch higher further, at least a 5 to 10% on an immediate basis. So thank you for your queries. We can meet again in the pre-market outlook session tomorrow. Until then, we wish everyone to have a fortune trading day today, because if you are an investor focusing on good hunting of the buying, you can utilize today's kind of trend as a portion of investment can be made, not in a full sum or lump sum or a single shot of investment. That is clearly, strongly not advised. Thank you. Bye-bye.